Total trailing. Let's discuss how this is currently implemented in Acuitas and exactly what it is for people who don't really have a full concept of what a trailing window looks like. So a couple things. Trailing uses price only to determine its action. So if there's a TA-based strategy, then trailing doesn't necessarily matter. If we give you the trailing option in Acuitas, then you have the ability to attempt to get a better entry or exit based on the price activity at the time. It's important to note that this happens after your strategy says it can enter or can exit. So it kind of takes it over. And it's also somewhat of a gamble. So I'll explain to you why that is. So on the chart behind me, I've pulled in a 15-minute TUSD chart. And I've drawn a box over here that's kind of showing what 0.5% looks like. And we're assuming that my gain in my strategy is 0.5% and my trailing is 0.25%. So what happens is this is a back test, so it's operating on closed candles. Normally in live trading or paper trading, you probably would have entered somewhere over here. But for the sake of this discussion, let's just say that's where the strategy wanted to enter. So what we're doing is we're opening a trailing window that pops open above it. Price is allowed to oscillate within your trailing window. And that's part of the gamble. Again, I'll explain that in a second. And also, it's a one-way moving window. So on the buy side, it's going to try to push down. And on the sell side, it's going to push up. And what I mean is, if it opened up here and price action is still pushing downward, then it would have pushed this window down, 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 down to the bottom of this wick. Then price started to oscillate back up and exited over in this area, getting you a little bit of a better entry than you would have had you not had trailing on. The same thing goes for the other side on the sell. So on the sell side, it opens up on this direction. And again, price is allowed to bounce in between. In this case, at this candle, it would have pushed this window all the way up to this wick. Okay. And then price came down and broke the bottom of the one-way window and would have sold somewhere up in here. Again, with slightly better profits. That's pretty much it in a nutshell. The difference is, or what's important is, if you use a larger window, you'll get different results. This is approximately like a 1% window. It doesn't really matter for purposes of this discussion. But let's say you wanted to open a sell side window here. Okay. It's much larger, allowing for more oscillation and potentially more gain and less fake outs, right? Because price action can go pretty heavy. So sometimes you may want to, try to get a better trail out of it and not be faked out. So in this case, it was pushed up to this first candle here. Okay. Price did not exit out anywhere. It actually went up to the next one. Still, all the prices are contained. Therefore, you haven't exited out of your sell yet. By the time the pricing gets over to this candle, it's pushed up again. Okay. And again, it exits over here, but this next action here shows that the window would have gone to here. And eventually, prices dipped outside of your trailing range, and this is where you would have exited. Still at a better bonus, right? Where you see these big trails make a difference is over here on the right. It really pushed it up and allowed it to contain itself to about here, and you've been a wick. It's called wicked out, right here. Sometimes a small trail would have had similar results, but again, we don't know the price action within this candle, so it's really hard to tell. These are just 15-minute closes, so within this candle, it might have just pushed by up in, and allowing a trail to go all the way up because price was just kind of stair laddered up without ever coming out. We can't tell in this back test, but in live trading, you'd see that. So. In any case, hopefully that explains the trailing a little bit more and gives people better insight into the logic of what's happening. Going forward, there are other ways we can implement the trailing. We can do things like, do a strategy check. If you're on the buy side, for instance, okay, and you've trailed down, right? If this is a bigger window, then maybe maybe once you cross back up and you haven't exited yet and you're above your strategy condition, maybe you shouldn't be trailing. Maybe we turn trailing off and wait for another trailing opportunity. That could end up in less trades overall. We'll have to test that out. But that's the way trailing works currently. And again, if you have any questions or concerns, feel free to reach out. Thanks for watching.